morning, Martin. That's right. Local analysts are calling it a earnings surprise. This is, of course, coming after 2 straight quarters of Samsung posting earnings shocks. A fourth quarter earnings guidance is showing operating profit expected to come in at 5.2 trillion won, higher than local consensus of 4.8 trillion won, a 37% drop from the same time last year, but an improvement of 28% quarter on quarter. Revenues also slightly lower, but mostly in line with market expectations, coming in at 52 trillion won. So I guess market expectations were so low to begin with. We are seeing the names, Samsung Electronics, Samsung preferred shares, keeping the gains that we saw at the open. Samsung Electronics preferred shares up almost 2% right now. Earnings are up more than 1 trillion won compared to the previous quarter, and analysts are saying that this is coming from Galaxy Note 4 sales shipments and also lower marketing costs and cost-cutting efforts from all the divisions across Samsung Electronics. Also, the FX rates were one of the biggest factors that were mentioned by analysts, saying that the currency forecast that were made in the third quarter, the FX rates actually improved much more than the forecast. So the average FX rates for the fourth quarter was 1,085 won per dollar compared to 1,025 won per dollar in the previous quarter. Again, the IM division is expected to post a 1.75 trillion won in operating profit when more details come out with the official earnings numbers later this month. Martin, over to you.
Okay, June, thanks a lot, June Yoon. They're live up in Seoul, SBS-CNBC. Ed Snyder is co-founder and also managing director of Charter Equity Research. He joins us live out of Colorado Springs, Colorado now. Ed, good to talk to you. Appreciate your time. You've had a look at the numbers. I mean, the headline is, higher margin chips. They did the business for Samsung and helped, that plus, of course, a weaker yen. And that helped to offset not so good business, slumping margins over at smartphones and also TVs, which are both obviously getting more and more commoditized. Did any of that surprise you?
Not really. The Note 4 opened to pretty good reviews, and we expected to get some strength there. But overall, Samsung continues to struggle in phones. It's getting hit at the high end by Apple. It's have a hard time competing with them. And then at the low end, a lot of the Chinese are really on its heels here. So it's a tough spot, which is why they're cutting costs so much. So that seems to be working well for them. But if they're going to get this turned around, they're going to have to make a much bigger splash with a Galaxy phone coming out in March or April and show that they can actually compete at the high end because that's where most of the profit's going to be to begin with.
So here's the thing. I mean, you mentioned the word turnaround. This is interesting because, and talking about headphones, I mean, right after their Note 4 came out back in September, this was 3-4 months ago, you had the the vice chairman, overseeing strategy to try and revamp the company, deploying a whole bunch of workers to try and reinvent the company as a maker of web-connected devices. We're talking about, of course, the Internet of Things. Is this the way that you think Samsung should be going?
It's tough. I mean, it's a hip buzzword, IoT and wearables, but there's not really a market per se for that. It's really more of what we used to call the embedded space. So there's not a big vertical market that could support a company of Samsung's size and turn the company around. It's not like smartphones, which is far and away their largest division. So even if they're successful in the Internet of Things, whatever that is, it's going to start small and it's going to be a fairly small piece of their business for quite some time, and it will not offset further declines in smartphone, and that's where the problem is. They're losing market share. Their profits are way down. That's why they're cutting costs. They've got to rationalize that business and figure out a way to compete both at the high end and the low end if they're going to really make this work.
Hi. So a quick question on the stock price, I guess. Looking at what people are saying about the guidance numbers, it looks like a big part of the improvement is coming more from external factors like favorable FX rates and cost cutting. But regarding future growth engines, there seems to be continuing concern over this. So from an investor point of view, where do you see the stock going from here?
Yeah, that's a good observation. They got a nice boost from foreign exchange benefit this quarter. They've cutting costs. So you want to be a bit cautious on the stock here. The fundamental driver for the company, primarily smartphones, is not where it should be. And so while the stock is up because expectations were low and you've got some benefits, those are typically one-time gains. You're not going to get a foreign exchange benefit every quarter. You can't cut costs forever. And so until you see the turnaround. So I would be a little bit cautious here until I see what happens in March when the new smartphone comes out, or see what happens with memory prices. Because outside of that, you're really going to have a big question mark on what the company's going to do in 2015, especially against what Apple's going to be releasing. They've got their wearable coming out. You've got a lot of competition from Xiaomi and some of the Chinese lower-end companies. So you've got to see what Samsung is going to do after this reorganization before you can have really confidence in where the stock's going to be.
So, Ed, I'm glad you brought up the name Xiaomi, because these guys, they've been killing it, right? Is there any way in hell that names like Samsung can compete in the smartphone space when, Xiaomi, they've cut off so much cost, so many layers, the middleman, distribution, etc., and they're using this online model?
Yeah, that's a good observation. The Chinese are operating on a little bit of a different playing field in terms of a cost basis, and that works very well within China and some of the low-end Asia, but they're going to have a very difficult time, as you've seen, getting into the mid and high-tier markets where Samsung and Apple dominate. So Samsung's a little more protected in that regime. In terms of cost, Samsung is probably the most aggressive handset OEM outside of the Chinese on costs, and they've got a phenomenal supply chain management group. So if there's any company out there that could retool themselves to be competitive, it's probably Samsung. It just hasn't happened yet. So I'm still fairly optimistic. Samsung's business model is very, very different than most handset companies. They're a fast follower, and it's hard to get taken by surprise when you're following whatever's most popular or whatever happens to be working. So I think there's lots of hope for Samsung. They just got to show that they can execute on a turnaround.
Okay, all right, we'll be watching. Ed, great to talk to you. Appreciate the time.